Good morning, everybody, or wherever you may be around the world, whatever time it is. It's myself, Gareth Soloway, with Ben Cowen. How are you, buddy?
Pretty good. How about you?
Good. What did you think of today's crypto action, man? Holy cow!
Just another day in the cryptoverse, I guess. Yeah, I mean, it was interesting because it seems like there was a lot of liquidations that took place. So I'm just tweeting out our show right now, but it seemed like there was a lot of liquidations that took place. But I think the bigger news piece of this, beyond the news, right? The bigger thing to look at is alts are still bleeding against Bitcoin, right? And it shows that that's the phase of the cycle we're in.
Yeah, absolutely. I think that's 100% right. I'm just throwing up my chart now. We'll go to your chart in a second. But, we had this kind of little upticking going into today. And what I kind of think about this, right? So a couple of views, and we were kind of discussing this before, is like, if you're Gary Gensler and you're like, yeah, we need to approve something like this eventually, today's price action on fake news. And for those of you that may not know, if you live in the bubble, right, or outside of the bubble, basically there was fake news that the ETFs had been approved. The price ripped up to 30,000, and then obviously has collapsed back down as it was fake news that was released. And again, going back to what Gary Gensler, I mean, if you're Gary Gensler and you're looking at this, here's a $500 billion market cap Bitcoin, and it just moved. What did you say, 7%, Ben? Something like that on fake news.
Yeah, I mean, like I think from what it went from 28K all the way up to like almost 30K, a 7% move. So I just go back to this idea. I mean, personally, I hope that a spot ETF is eventually approved, just so crypto Twitter will stop talking about it every single day. I'd like to see other headlines, but on the other side of it, there are some elements, in my opinion, of hypocrisy when it comes to the spot ETF, because it's like on one hand, people will say like, not your keys, not your crypto, not your keys, not your Bitcoin. And then on the other hand, they'll say, spot ETF over here, spot ETF over there. But it's like, that defeats the purpose. And what it really shows, and this is something we knew all along, what it really shows is that people are here not necessarily for the tech, not necessarily for the narrative. A lot of people are here to make money, right? And the reason they want a spot ETF approved is because they think it's going to bring in more liquidity and lead to the valuations going higher, which again, that's why we're here. We're here to, make money. We're not here to feed into all these newer narratives, but it's just like, be honest about it, and stop saying not your keys, not your Bitcoin, and then talking about a spot ETF
Right.
every other day, right?
Right, exactly, folks. And for those of you guys that may not understand, essentially the spot ETF would be something that stock people could trade. It would be traded on the New York Stock Exchange or the NASDAQ. And as a spot ETF, they would have to hold Bitcoin in that ETF. But if you're buying the ETF, you don't own. I mean, technically, you don't have the control over those Bitcoins. So that's the idea behind it.
It's kind of like with the gold ETF. I mean, there's a lot of like gold bugs that would scoff at the idea of ever buying into like a gold ETF, right? It's like you buy the underlying asset. That's the point of it. It's the same idea with Bitcoin. Again, I'm not really commenting on whether it's bullish or bearish. I think it's going to depend on where we are in the cycle, but I think that's just sort of a point we should note.
Yeah, and by the way, just for the record, that's a great point on the gold ETFs. I mean, same kind of deal. It's not your technically gold; it's stashed somewhere else. They're holding it somewhere else. And for me, and I can speak from my personal nature, is that I do hold some physical, but then I also I hold physical gold and silver and some of these other metals because it's a insurance policy. If I wake up and God forbid the economy has collapsed and there's chaos in the streets, I have that, right? But ultimately, for investing purposes and for shorter term movements, it's very hard to go buy and sell gold quickly, like if it's physical versus the GLD, which you can just go on the exchange and boom, done exiting if you need to exit. So I think there's a case for both, right? I mean, as an investment, the ETF makes a lot of sense. For a lot of people in this world, that's going to be the place they do it. And then for other people that do believe in, not your keys, not your coin, right? I mean, that's going to be where they're going to want to hold them themselves.
Yeah, exactly. I mean, I use both ways to invest in precious metals. I just sort of see like, there is this element of what do people care about more? The reason that Bitcoin was created or liquidity coming into the cryptoverse. I think from a technical perspective, what we're looking at right now with Bitcoin is, I mean, this is a pretty long wick here. It went all the way up to right around 30K. I mean, I think it hit 30K on some exchanges. On Coinbase, you can see it hit 30K. And I think the issue is that technically speaking, this is still a lower high, right? I think we talked about this. We talked about this high. We talked about this high. And we previously said that, like there is a chance here that it could retrace that entire move, just like it did in 2019, right? We had a long wick up.
Yep.
But I suppose like you can see this wick right here, and then that's what sort of bled down into new lows. And by the way, this topped out in October, right? This wick was in October of 2019, and we took out these lows in November. So I'm still of the opinion that it's likely a lower high, and a lot of people just got liquidated, and maybe over the next 4 or 5 weeks we'll have the sort of momentum to sort of go back to the downside.
Do you think that what happened today makes it any more or less likely, mainly less likely, that Gary Gensler approves this in a timely manner? Like, is it more likely that he could just stall this thing even longer because of this, or you think it is going to happen when it happens, kind of thing?
I mean, I don't really know, honestly. Like, I mean, I feel like eventually they'll be approved. But if you're Gary Gensler, if you're the SEC and you're looking at this, I mean, it seems funny because you're talking about these markets and manipulation and stuff, and a single false tweet moves the market 7%. Like, that's not a point for crypto, right? Wow. Like, that's a point against it. Again, I hope it eventually gets approved, more so just because I mean, I would prefer for us to focus on other things. Second of all, I mean, it will bring in more liquidity into the market, but I think the bigger issue is, think about a few weeks ago, everyone was talking about the futures for Ethereum,
right?
That launching, and everyone was talking about how it was going to go higher, and it's just gone lower ever since. So it's kind of like if it's launched during a period of lower liquidity, it's probably not going to have the same impact as if it's launched into a period where we're in QE.
Yeah, I agree. And just on my chart, guys, one of the things that I'm keeping a close eye on here, let me get rid of that there. But basically, there's a chance that we could be making a head and shoulders pattern on Bitcoin here. I'm going to change the color of the neckline here so it's a little bit more obvious. But just to do, so you can clearly see shoulder, head, and then this kind of wick today really helped make that shoulder potentially to the upside. So if we were to curve down and eventually break the 24.8, 24.9 level, this neckline. I'm just curious about this. I don't know what the target would be, but we can calculate it out really quickly.
About drop that
plumb line down. So it'd be basically a $7,000 drop from the high there to the neckline, and you'd replicate that out here, and right around basically right there. So yeah, you'd be looking at 18K. Wow. So that would, again, and there's no, it doesn't have to play out that way, meaning you don't have to make the shoulder here, but it is a pattern that I'm keeping an eye on now. It is showing us that you have the lower high for this shoulder, the lower high for this shoulder. And again, if it breaks that neckline, it's game on to the downside potentially. So yeah, kind of crazy, man. It's definitely caught me off a little guard. The other thing and again, this is just speculation on my part, but we did see kind of a little bit of a move up last night. And it's like, you can't help but wonder, whoever released this fake news, they probably were buying Bitcoin ahead of this, right? I mean, if you were going to release it, you're not going to release it and be like, oh, I'm not going to try to make money off of it. And so you have to wonder if the upticking on Sunday night was someone buying ahead of this news, and then they just dumped into it. And kind of shady, man.
I mean, it certainly does sort of paint crypto in a bad light, but I mean, hopefully by the end of all this, we can sort of grow as an asset class and see the crypto asset class mature, just like internet stocks matured 20 years ago and became the behemoths that they are today. One thing I was looking at as well is the 200-day, right? The 200-day is, and the 200-day has been sort of holding Bitcoin down here, and this is a long wick up, but it's, the 200-day is just at around 28K. So I'd be looking to see if we close below that by the end of the day. But the other thing that I think we've talked about a little bit before is, in the same way that uptrends are often characterized by, periods where you're moving down for a lot of it, right? And then you just sort of blast on into a new level. Downtrends can sort of sometimes be characterized as short-term uptrends, and then at some point you sort of just go into a new level. And so I still think that thesis still stands here. Gareth, I'd like to talk a little bit about how this has affected the altcoin market, because maybe you could pull up the Bitcoin dominance chart and we could talk a little bit about that, because dominance put in new highs today, did it not? I believe it went above 50. Yeah, it went above the prior high.
Yep, it sure did. Yeah. And again, folks, for those of you out there, what this tells us, and this gave us kind of an inside view of what will happen when an ETF is really approved, right? Money is going to rush into Bitcoin, And it's, maybe the sympathy play is to get the altcoins a little bit of a bid, but this clearly shows that when people thought this news was real, the pop in Bitcoin dominance was substantial. And again, I think that just proves that Bitcoin dominance will go higher because the money concentration based on a spot ETF, it's going to bring in a lot of new money into Bitcoin, like that people that don't want to have a crypto account. They just want to have their stock in portfolio. And that's the money that's going to drive Bitcoin dominance probably higher.
Right. And I think it sort of goes back to the theory of like the dominance goes up no matter the way that Bitcoin goes, right? I mean, look at the dominance weekly candles where this is we're in our 9th green week, right? And our 9th green week, I think we spoke about back in the 2nd or 3rd week, we mentioned it could likely follow the DXY, right? The DXY got like 11 weekly green candles in a row. And look at the dominance. It just keeps going higher. But what's fascinating about this move, 9 green weeks in a row, go look at Bitcoin USD. Only 3 of those weeks have been green, right? So, I mean, it shows you even when Bitcoin is slowly bleeding, the altcoin market is bleeding back to Bitcoin. When the news comes out and it's positive, it's like a spot ETF, everything bleeds back to Bitcoin. Sort of going back to the thesis all along is like, if the altcoin market is going to bleed back to Bitcoin regardless, the altcoin market, in my opinion, is just too much risk, right? Your returns are probably going to be better in Bitcoin, your risk-adjusted returns. Anyways.
Yeah, I think that's true, and I will say this as you've been dead on this, and I know sometimes people are like, oh, he's like a broken record, but you've been a broken record. Like, I mean, there's like no, it is what it is, right? I mean, it's you say it till you're blue in the face because it's dead on. Every single time we get on here, we talk about Bitcoin dominance, but it's because it keeps on moving in that same direction, and you're dead on. So that's very cool, man.
Yeah, and I mean, like, one really cool way to look at it, by the way, is to look at dominance excluding stablecoins in 2023, and to look at the average of the last 2 pre-halving years, 2015 and 2019. And I've said for a long time, I think we're going to close this gap, right? And we're going to come back up to this average, just like the price is at the average of the last 2 pre-halving years. I think the dominance is going to go higher. Mm-hmm. And people say, well, it's not going to, but I said one of the main reasons it goes higher is due to the collapse of the Ether Bitcoin pair. So technically speaking, Gareth, are we not witnessing Ether Bitcoin in a capitulation phase right now?
Yeah, it certainly looks like that's a possibility. Yeah, I think so. That's amazing, man. I just think like today's a day where you have to just step back from crypto and say, number one, Bitcoin again proves that it's really the main game in town, and number two is that it's still an asset that is, I was saying this on my live trading room today where I was day trading stocks mainly, but we actually did trade BITO. When Bitcoin collapsed back down, we bought on the Pierce of 28,000 BITO, which is the futures ETF. And we actually made some nice money. I mean, the volatility was just great, but it just goes back to the crypto market. To me, is like the penny stock market in the 1980s when you had Wolf of Wall Street. You had, the movie Boiler Room. If anyone hasn't seen that, it's one of the great movies that's kind of underappreciated, but it shows you what that was like, the shadiness that was going on in the industry at that time. And it's really like fast forward this many years, basically 40 years, and that's the crypto markets at this point.
Yeah, I mean, it sort of seems like to me right now, what's happening is that people are getting distracted by these moves by Bitcoin, right? And they're sort of neglecting to see that a lot of these other cryptocurrencies are collapsing on their Bitcoin pairs, right? And the thing is while it was fake news, while the spot ETF stuff was fake news and it was not real, the altcoins are still down on their Bitcoin pairs, right? Like they haven't actually recovered. And that's the issue, is that they struggle to catch a bid, and no matter what. And so that's the thing about this phase of the cycle is like, even though it was fake, there was still, a lot more money that went into Bitcoin that went into the altcoin market. And now that it was fake, the altcoin market just keeps bleeding, right? And look at this ADA Bitcoin. It just put in, is now below 900 sats, right?
Wow.
And I think we talked about last week, right? It was sort of back testing. It sort of back tested the breakdown point, and then now it's sort of falling back down.
Yeah. So let's quickly flip over to gold here. I want to talk briefly about gold, because I think last time when we were on this stream, when we were doing this, gold was at this low end, and there were so many people panicking. And one thing I just want to impress upon everyone is that emotion is your worst friend. It's the evil that will make you do the wrong thing at the wrong time. And so what you saw here is that you had gold down like 9 days in a row, but you had this parallel channel, this line to this line, and you were just into that there, and you had this pivot low. And so as a technician, this is what I've trained myself to do, and it's taken decades, but is you don't allow 9 straight down days to make you worried because you focus on the support. And as long as we were holding that support, this thing was fine. And what we can see is that was a great flush out of weak hands on gold. Gold then reversed and actually closed above the channel and is now beginning what I would think is bullish consolidation over the next few days. And so to me, gold again continues to shine here. If you look at, again, the relative strength of US dollar, the break here, I think by end of year, we're probably testing this all-time high again. And I would just point this out again. And we talked about, a potential head and shoulders on Bitcoin that maybe is forming. But did you guys see there's a kind of an inverse head and shoulders here on gold, which is fascinating to see a head and shoulders and then potentially an inverse. But essentially, you could make a case that you have this, if this heads back up, you have a shoulder, head, and shoulder, and your price target here is about 24 to 2,500 in 2024. So just an interesting little price action. I love showing charts where it whips out people because it shows how emotion, again, is your worst friend. And it's just focus on the facts, the logic. And that's really, I think that's something you do, Ben, all the time, is you don't seem like when you're investing, you're really getting emotional. You're just like, dude, this is what the data says. That's what I'm going to go with.
Right. I mean, I certainly get accused of being a broken record, but I mean, if the trend hasn't changed, why act like it has, before it has? Yeah, gold is I have this. I'm not really that much of an expert on precious metals, to be completely honest, but I do look at the prior gold bull market that was over here, and I see that it basically held this sort of 20-month SMA, the 21-month EMA. Every time we sort of came back down to it, it held it. There were some fake outs, but every time there was a fake out, we got right back above it the following month. And you can kind of see that it looks like the same thing is happening, over here. At least recently, we sort of had a fake out here. It's now right back above it. So yeah, I mean, I think over the next like 5-7 years or so, I imagine that hard assets like precious metals and stuff, I think are probably going to do fairly well, right? I think a lot of people in the space if it's not doing well today, then they think it's not going to do well ever. But it certainly seems like we are certainly trending in that direction. Do you think silver is going to sort of follow suit here with gold, or do you think it's going to underperform? Is the gold dominance sort of akin to the Bitcoin dominance, but within the precious metal space?
That's kind of where I'm at with it, is like gold is your Bitcoin, silver is your Ethereum. So I do think that that's the pure play. And part of that too is that what's fascinating is that comparison shows you how Bitcoin really doesn't have a lot of use case, but Ethereum is used, just like silver is used in industrial production, right? So it has this other factor, which to me makes me just a little bit more iffy on silver. And I still think silver does well because inflation remains high. But I do think that if we do enter a recession, the demand for silver from that side, from the industrial production side, could slightly come down, which could then affect silver just a little bit. So again, it's kind of like, what's the easier trade? I mean, silver ultimately, I think, outperforms gold. It just naturally, historically does. But at the same time, the easy trade is just the pure play, which is gold.
Right. Yeah, I'll defer to you on that. I mean, I think I tend to agree with you that gold is probably where you want to be over silver. The only I've sort of, I guess I've looked at this before. I wasn't really sure if this is sort of like an upward sloping channel. So if this is the gold silver ratio. So like if this is going higher, it means that gold is outperforming, right? So you can see that gold has been outperforming since March of 2021, more or less, over silver. So perhaps there's some sort of a channel here. I wasn't sure though if we should look at it as an oscillator, but maybe you could comment on that. Maybe it looks more so in like a sort of like a rising channel.
Yeah, one of the things that, and I don't have a chart on this, and this would be something that maybe down the line you could have a chart on, but it's like I'd love to see gold in terms of M2 and then silver in terms of M2. And then as M2 is kind of moving around, wow, look at that.
Yeah.
So what's interesting is if you connect that recent high, number one, it looks like a cup and handle pattern to me. But if you connect that recent high there from 2011 straight to the high down, it almost looks like there's a trend line that's trying to get ready to break out there. And I think that's
large scale. I don't know. Should I use large scale or linear?
I don't know if it matters. I mean, I usually use linear, but I mean, either way, it's right there. See, you're now above that trend line right there, and you're actually making a bull flag position there. So I think that's just a really cool. I mean, these are the types of things that you don't really hear about, but it's interesting to to look at charts with other metrics involved that most people don't look at, because it does give you insight.
Yeah, one really interesting thing, and I think in terms of thinking in business cycles, right? Especially if we go into a recession, right? But risk assets bottom in a recession typically, but the bond market normally bottoms before risk assets, right? So I'm starting like I feel like recently I've become on alert for, okay, like when's the bottom in the bond market going to occur? Are you watching the bond market at all? I know it's been, I've been very bearish in the bond market this year because I didn't really think the market had priced in higher for longer. But I think that the market is starting to price in all that stuff, and I do wonder how much higher the long end of the yield curve can go before it's too much and it leads us into a recession.
Yeah, I agree. I'm in the same camp. And again, one of the charts that I just love looking at is the monthly 10-year. And there's this trend line. I think I talked about it probably in the last 2 streams of ours, kind of talking about this level. But to me, I do think that yields are probably closer to the end of the run than the beginning, for sure. And they may have even topped out when we topped out on the 10-year at 4.9%. Again, it's one of those things and I was thinking about this over the weekend, is like, where would the financial system be if the Federal Reserve, the government, didn't come in and basically guarantee deposits at these banks that failed in March, right? I mean, think about that was when yields on the 10-year were 4%. You throw in 4.7%, and I think the only reason you haven't seen a catastrophe in the banking sector is because people essentially believe deposits are guaranteed.
Yeah, no, I mean, that could have been a catastrophe back in March, but it seems like they handled it. I do know it was only for 12 months though, right? I mean, so theoretically, they
Theoretically, yeah.
Theoretically, they're probably just going to extend it this coming March.
Right.
But yeah, no, I think I've been following like TLT again. So like as the long end goes up, TLT goes down, and vice versa. So if the long end starts to go down, TLT would go up. And I've sort of been under the impression for a long time that 80 to 85 is sort of where it potentially bottoms out. I mean, it could go into the upper 70s, but I think this is getting pretty close to the bottom. And so I think the issue here, and I guess the reason it could go lower, is if the long end of the yield curve goes up to where the short end is, right? Like, so the short end is at like 5.5%. So if the long end goes up to 5.5%, then I suppose TLT, things like TLT could go lower. But I think that's what we should be watching, is like, if and when the bond market bottoms, then I can start to be on alert for potentially like, riskier assets bottoming. Like altcoins will probably bottom sometime after the bond market bottoms, but the bond market put in new lows literally this month.
Yeah.
So that's, I think, the reason why to watch the bond market. And I think a lot of people, including myself, haven't really lived through a full business cycle to necessarily appreciate the slow process, right? Like bonds bottom first, then the stock market, and so on and so forth.
Yeah, I think this bond, bear market is now the worst in history. I think it was even going back to the 1800s, although, you wonder how accurate that data is back then, considering the data that they were able to accumulate. But it is a remarkable what we're going through. And it also, I think, puts in perspective of how I've said for a long time, and I know you're on the same page, is that when you get a government entity, or in this case, the Federal Reserve, to intervene and artificially inflate things, it does cause other things to break. I mean, we saw it in 09, 08, 09 with what happened then, and we've seen it even more so here, where that was an artificial, like yields should not have been that low, right? I mean, and then now you're seeing the repercussions of that policy.
Maybe we should end the show on potentially talking about the traditional markets, like the S&P 500. What are you looking at right now on the S&P?
Yeah, so couple little interesting things on the S&P here. So number one, Friday we had a down day. The VIX, which is the fear index, had a big pop. It was up almost 20%. Now, a lot of people didn't understand this. And same thing, by the way, the dollar was up on Friday, but yields on the 10-year were down. And so what you have to understand, and this is something that I actually accumulated a fair amount of longs on Friday going into Monday, on understanding that the VIX was popping so much because people were buying protection with the worry that by the time Monday came, we would have some sort of big event where the whole Middle East was being engulfed, right? So they were buying protection. That's why the dollar was up as well. The dollar was being bought with protection, and then vice versa. Yields were actually coming down because people were buying bonds, which is a safety hedge. Today, we're seeing the S&P bounce back. I actually still think the S&P shorter term, and again, we're looking at a 1 week outlook here. but I still have it going up on the spiders to about 438 to 439, and maybe even a little bit higher, even though my midterm outlook is still for a bigger rollover. But I just think, again, if yields are going to come in, if the dollar is going to fade a little bit here from these massive moves, that's generally going to push risk assets, mainly stocks, higher here in the near term.
One interesting thing is, as we previously discussed, that sort of that seasonal pre-election year correction by the S&P. And look at this. I mean, it brought it back to where it always is at that phase, and it's bounced up a little bit here. What's interesting, though, is if you look at where the S&P found this local low back in 2019, it actually occurred on October 3rd, right? On October, we had that seasonal correction, August, September, and then a local low on October 3rd. I believe this time is kind of the same thing, right? I mean, like, it looks like this bottomed out here on October 3rd. Very similar move. I think, for me right now, it's basically the S&P can, of course, continue to shrug things off, but eventually, upon yield curve on inversion, maybe even before that, I do think we are likely going to see a recession or a recession scare at the very least, and that's going to sort of be where the Fed is going to be forced to pivot, and all these risk assets go into potentially price discovery to the downside, where they realize, okay, well, they're not going to start going back up again until the Fed goes back to looser monetary policy. So, I mean, I'm in agreement with you in the short term for sure. I think that, even looking at like the 20-week SMA or the 21-week EMA, the S&P sort of coming back up into those levels. I have, just over 4,400 as potentially this area that I'm looking at, if it, could be a rejection in that area. If we get past that, then it's not completely out of the question for the S&P to sort of slowly trend up in Q4. But I think the further we are after yield curve inversion, I mean, we're now 12 months out from inversion of the 3-month and 10-year yield, and more like almost a year and a half from inversion of the 2-year and the 10-year.
Yeah.
History shows the further we get out, the more likely the recession becomes.
Yeah, and I think that's going to be the big test, is that with the dollar falling, if yields continue to pull back, does the market get that push? But then at the same time, watching the yield, the inversion, does it uninvert? How does money start to kind of recognize that? I did read that the commercials on the COT report, they are now more short the markets than previously. So there are some of the bigger money players that are continuing to move on the short side of this market, which again, you have two angles to this. Number one is, they will ultimately be right. The other side is, you have seen squeezes prior where they've been caught off sides. And so generally they're right more than they're wrong, though. So I do think that they're seeing the same thing you and I are seeing, that eventually that uninversion does yield a recession in the markets. And yeah, man, it certainly will be interesting to see. So couple things on Bitcoin I just wanted to throw out to you is, number one, we talked about, does this make it more likely or less likely that Gary Gensler will approve? I think, if anything, it keeps the timeline the same, or it extends it out. I don't think there's no way you could say that this news today on Bitcoin helped get an approval through the door. So that's the negative for crypto here, is that it just basically puts up a minor roadblock potentially. The other thing I would just say is that, we're in a scenario where I'm curious about this 4-year cycle. Like, does this change anything? And so far, probably not. But man, we've got money supply dwindling, so there's less liquidity. I mean, there's so many things going on here. Can the 4-year cycle still play out? What do you think, man?
I just stopped sharing my screen, but maybe I'll just share it really, really quick to show one more thing. The thing that I noted about the last two bull markets, that, and I'm not talking about sort of these pre-halving year bull markets where you kind of just go up and then you fade back down. But if you notice, like, look at 2 cycles ago, what happened before we actually had a massive move by Bitcoin? And again, like, some people might say this is not that big of a move. This is a 90% move off the low, right? That's not that dissimilar from what we've seen in 2023, right? About 100% move off the low. But look at this weekly candle by Bitcoin that it had here in 2015, in August 2015. This was like almost a 40% drop in a single week. And then in this cycle, last cycle, we had, and again, I know it was coming on the back of the pandemic, but we had about a 50% drop in a single week, right? And so what normally happens is you get this secondary scare by Bitcoin where it flushes out everyone, right? So like all the people that are just sort of blindly DCAing, what often happens is you get a secondary scare, it flushes these people out, they get super scared, they sell, and then the real bull market begins, right? So I wouldn't be surprised if something like that were to happen again. I think the bigger question as it relates to the 4-year cycle is, does that happen before the halving or does it happen after the halving? And Gareth, I unfortunately don't have the answer to that question. We still have like 5 or 6 months, about 5 months, 5 or 6 months before the halving. So I guess we'll just see if a recession comes before then or not.
Yeah, and the last thing I want to just mention here is, this is something that, there's people always out there that are like, oh, Gareth and Ben this and that, and one of the things that I like to say is, number one, like I said, Ben's been dead on this, but also, when I called the top on Bitcoin at like 69, 68, 67,000 in that range, I was in Dubai at the Dubai Blockchain Summit. Actually, it was basically multiple years from this almost exact date. If you had sold Bitcoin, let's say you had 5 Bitcoin, and you had sold it at 60,000, at 20,000, you could have bought 15 Bitcoin for that same amount of money. So it just shows you that you really want to be aware of the cycles, because smart investors can really utilize that to double up their positions without actually having to lay out any additional money. And it's really amazing when you can do that. And so many things that you said, Ben, are dead on in that respect too. And if people are following and really understanding what your guidance is, they can really do that to the nth degree. And it is pretty amazing.
Yeah, I mean, it's like the Ether Bitcoin pair, right? It hasn't been a popular view to say it's going down, but it just keeps going down, right? But anyways, guys, we're at the 30-minute mark. We're going to wrap it up. If you're not subscribed to Gareth, make sure you go subscribe to him. Links to all his socials are down in the description below. And we'll keep doing this. We'll be back here next Monday, and we'll see, what happened to this move, if there was any follow through, or if it just ended up being a lower high.
Yeah, absolutely, guys. Same thing. Ben's socials are just below. Check out his website. It is awesome, guys. And again, my hope is that this continues to be the place where people can get this non-biased, pure chart, pure data information, and it actually should help you guys make good decisions, not FOMOing and fudding. All right, you guys have a good one. Have a great one. We'll see you next week.